Hi, everyone. This is Jason Burack of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's guest is a returning guest. It is Durrett, author of many versions of How to Invest in Gold and Silver, a complete investor's guide to the sector. And also he runs the new website, Gold Silver Data, which is a paid newsletter subscription service, and it shows people how to invest in the different size mining companies, especially juniors. So thank you for joining us here today, Don.
Yeah, Jason, thanks for having me.
Great. Now, Don, it's been a very we last spoke, I think, in August, and things, the mining shares, the bullion prices have continued to go higher, but the mining shares have basically been stuck in a holding pattern. If I look at charts of the SIL, the long-term chart, the GDX and the GDXJ, they put in a really solid double bottom, and then it looked like they're forming a cup with a handle for a continuation and a possible breakout, but now they're just going sideways. Do you think this is because of the tax law selling season or the fiscal cliff, or why do you think this is happening right now?
No, I wouldn't put up the tax loss selling season, which usually is in December. What we've seen is kind of a dichotomy. You've seen the strong companies kind of hold their value to a certain extent. For instance, First Majestic Silver's still trading over $20 a share. But any company that has to get financing has been getting really hit hard. Investors have been running from these stocks. Anybody that doesn't have cash flow, anybody that has to have a large capex, the valuations are incredibly cheap. For instance, Levon Resources, Sandspring Resources, Minetta Porcupine. I mean, these are companies with, 5 million, or Minetta is I think 4 million, but 5 million ounces plus. In the ground, and the valuations are just incredibly cheap, and their stocks just seem to keep going down, down, down. So I think a lot of it has to do with just the investors are afraid of these stocks. They've been running from them, and they can't seem to turn around. At some point, they will turn around. I still, for instance, in my newsletter in the top 25, I have a lot of these stocks in there, so I expect them to turn around.
That's an interesting opinion, because I know we had a disagreement on the last podcast, I think in August, where I was telling you that I was debating, I had started trimming a lot of my positions in the non-cash flow juniors that I own that were more than 18 months away from production, because of, talking with all the different contacts that I have in the industry, like Nolan Watson, Peter Grandich, and other CEOs, that the financing was just evaporating for some of these guys. And then you looked at some of the acquisition deals that have happened in the last year. You see that Yamana stole basically Extori Gold. They got the assets that were worth literally way over $1 billion, and they got the assets for $400 million. And that's a finished mine that's ready to go into production in 2 years. All the stuff is drilled out. The mining plan is done, et cetera, et cetera. And then you look at First Majestic Silver, a company you already mentioned here, but they did a really smart acquisition of Silvermex, and they got the assets which are already producing and have a lot of production growth too, and they got those assets for dirt cheap as well.
Well, yeah, you're definitely right. I mean, look at some of these valuations. I mean, Sandspring Resources, 8 million plus ounces. Their stock price is down to 43 cents, I think. Minetta Porcupine's 29 cents. Exeter's all the way down to $1.21. Mines Management down to $1.05. I mean, these are all stocks that need financing. So you're right. That's been the trend. But I've been picking stocks up. I'm buying the dip. If they keep going lower, I'm going to keep buying. My big concern is that I'm not going to get the kind of returns that I'm expecting, because eventually they're probably going to get taken out, and the takeout price is not going to be something I'm really going to be happy with. But some of these stocks are going to make it into production, and they are going to have amazing returns. So it is a high risk. It is a high risk because of the financing issue, and I think the financing issue is a good thing to talk about.
Yeah, and I think now people, like, if they're going to speculate on the juniors, like maybe in the past they would have had a much higher percentage of them, but the market just continues to worsen. I mean, most of the banks now, because the banks are getting free money to speculate with, even the Canadian banks won't finance nearly as many juniors as they would have in the past, and the Wall Street banks won't finance any of these junior mining stocks for the most part at all. So, like, these guys are, they have their own balance sheet problems. The banks, even though they say they're producing record profits off credit card spreads and derivatives bets,
right,
and, other gambling material that's speculative, but they're not making any real loans, into the real economy.
True. But let's turn this conversation around a little bit. Let's look at the positive side of it. I think that the trend in gold is improving. Reason why I say that is that because the global economy is weakening, and we talked about this back in August. I think that the growth picture, the global economy is getting weaker. And I also think that the bond market is actually becoming a more riskier avenue, whereas before everybody's just throwing their money in the bond market thinking, it's a very safe play. So the underlying current of gold is actually increasing. It's getting more popular. People are starting to see gold for what it really is. It is something that holds its value. So I think that the trend in gold is actually going to go up. We've had an 18-month period of gold actually being out of favor, going back to September of 2011. So we're getting up there over a year now. It's out of favor, and I think we had a spurt in September, but it died in October. But I think that you're going to see gold prices go up, and when you do, I think you're going to, at a certain point, these mining stocks are going to be profitable. And even if these companies that cannot get financing, these big deposits are going to get developed. So somebody's going to benefit. So the overall mining industry is going to benefit. But currently, mining is completely out of favor. That's why you're seeing all these stocks. People are just dumping all their stocks. But at a certain point, it's going to turn.
Yeah, I mean, the dichotomy in the market right now, the stocks that have been doing the best despite the correction in the general mining sector and some of the correction in the precious metal prices, you look at the royalty and streaming companies, which have just outperformed. Sandstorm Gold has been a real darling in my portfolio. And then some of the prospect generators have done very well, because what the prospect generators have done is they've been selling some properties at a fair value, but they've been at a lower price, like you said, in terms of the actual per ounce that they're selling back to the majors at after they find a deposit. But then they're putting a stream on there, so they're collecting royalty. So that might be something for people to look at. Yes, it's not as much upside as some of these other juniors, but the odds now, like you said, because of the financing issues of some of these juniors actually going into production are going to be pretty low. And this market is favoring the people with the cash flow, because they can come in if there's any financing issues, and they can come in and buy the assets for pennies on the dollar. Because you mentioned before we started recording that there was one of your favorite companies in the past that you mentioned was Andina Minerals, and you just spoke about how many ounces of gold they had, and if the market revalued this was a 20 or 30 bagger. And then you told me that the company was bought out for a hostile takeover, and they only sold their gold resource for $10 an ounce.
It was a friendly takeover, actually, which I was surprised it was friendly. It was Hochschild.
That's only friendly for the owners of Andina Minerals, not friendly for the shareholders, right?
It hasn't closed yet, but this is a good example of what's happening right now with the financing. Andina has 10 million ounces of measured and indicated, and so it was going to cost them a lot of money. I forget what the CapEx was, but I think it was about 500 million, somewhere in that ballpark. But the management decided that they could not get financing. They got an offer. They decided to take it. Hochschild, they're paying somewhere around $10 an ounce. I think it's less than $10 an ounce for gold in the ground. So these companies can buy gold in the ground for less than they can find it for, which is unbelievable. But that's what we're at today. I don't think it's going to last that much longer. But let's go back to, I think, you talked about royalty and project generators. Yes, those have done fairly well. But that's not where you're going to make your big money. And I think that gold, especially these mining stocks, are kind of a once-in-a-lifetime opportunity. I do have investments in some project generators because I think the ones that I'm investing in, I think they do have a good chance at a fairly good return. But you have to be careful with project generators if you're looking for the big returns, and royalties as well. Yeah, you can make, maybe 25-50% annually or something like that, and do well. But that's not where you're going to make your big bucks. It's going to be in these mid tiers and these emerging mid tiers and these juniors that have the potential of 10 and 20 baggers.
Yeah, Don, and you're looking for 100% plus gains, and I've made 100% plus gains in the sector before, but it's not easy. But the market just keeps like changing. I mean, this is a completely different financing market than it was even 2 or 3 years ago. So I think people, if they want to go speculate on juniors, and you have a very good website for the research for all of that, they're going to have to probably put less capital into that than they would have in the past, because we had some consulting clients who, only saw the reward part of the equation on many of these juniors that you have on your website. And some of them, they didn't listen to any of the discipline. They went, for lack of a better term, all in on some of these stocks, and they just got absolutely decimated.
Right. I tell people you cannot have a short time horizon when you invest in gold and silver mining stocks. Anything less than 3 years. Anything less than 3 years is too short. You got to have a 3 to 5 year horizon.
I agree. And never, I can't say that enough, buy your position all at once. Because just when you think the stock is super cheap, it somehow miraculously gets even cheaper.
Right. Yeah, get yourself a position and then let the stock go, and then decide if you want to add to it. Yeah, I agree with you completely.
Okay. Well, let's move on to actual gold and silver then, and some of the catalysts, because we've kind of been wrong then for, 18 months or so about the rise in gold and silver. They had pretty massive corrections, and we kept expecting them to come back. And I guess a lot of that hot money, the really large pools of capital, the Wall Street trend traders, maybe they were buying physical in the market there, and it wasn't moving the paper price higher, but the paper price has not really recovered that much. So what types of catalysts then do you see? Because you mentioned that the gold's going to go higher. Do you see gold going higher then because of Basel III, that banks now are going to be forced to buy and hold? It's going to improve their balance sheet because they're going to be able to use it for 100% collateral. Do you see Basel III making a big difference, or do you expect the Fed to announce a new stimulus program next week after the FOMC meeting?
All of these things are helping. They're all turning the tide, if you will, on the whole investment philosophy of what gold is and what an investment is, and do you need to hold gold as an individual investor. I think the whole trend in gold is changing. I used to have a fear that gold would say, 6 months ago, that gold had the potential to go to 1,300 if the stock market crashed, because I'm expecting the stock market to crash. But now I'm no longer expecting gold to go to 1,300, because I think that the whole idea around gold is improving. For instance, if you look at the charts on ETF holdings of gold, the trend has done nothing but go up. It's not going down. It's continued to go up. So gold holdings are increasing, so more and more people are buying gold, and they're telling their friends. So it's picking up. Also, central bank holdings. If you look at the chart on central bank holdings, that has started up over the last 2 to 3 years, and I don't see that abating. In fact, China, their government right now is buying something like 50 to 70 tons per month, and they've done that this entire year, which is an incredible amount of gold. And that's just the gold that's coming in from Hong Kong. So who knows how much gold China's buying. And I don't think China's the only central bank, the only government that's buying gold, and I think that's a trend. Also, you look at the global economic risk. I think that the global economy is not in a strong position right now. So that is helping the whole fear factor of gold. Probably Australia is probably the only country right now that's doing fairly well economically. The rest of the world is in a maybe not a recession state, but they're muddling along. They're definitely not doing well. And then the bond market. I think that the bond market is completely out of whack. I mean, we have 10-year bonds are 1.5%, 1.6%. 5-year bonds are less than 1%. These are completely manipulated. It's not a true, accurate bond market. So I think the bond market is something where people are going to start to get nervous, and if they pull their money out of the bond market, they're going to buy gold. So I see the dollar as a U.S. currency slipping away, if you will. It's people are trying to trade in other dollars. Oil, for instance, is traded in dollars, but it's slowly, steadily trading in other currencies. So I just think that the gold, and once gold goes up, the mining shares are going to do very well.
Some interesting points. And I don't see Australia doing that well for that much longer, because I think China's had a pretty serious slowdown. Now, China, it's not a depression in China or anything like that, but the Australian economy has leveraged themselves. You look at the investments that BHP Billiton and Rio Tinto have made in Australia, and those are two of the largest companies that do business in Australia. And those guys massively over-leveraged their balance sheets for high-grade iron ore, for coal production, for copper, and these other base metals, expecting, continuous growth from China. And now Australia is looking at the point where those large base metal companies have cut back on hundreds of billions of dollars of investment. There's rumors that some of them might need to restructure their interest rates on their bonds because they over-leverage their balance sheets, or they're looking for some kind of government sweetheart deal for a bailout. And then you add in the fact that there's all that Chinese hot money that's in Australia too for the real estate market, and all these extra booms that have been created due to the mining boom in Australia for the extra deposits that were put into production, and you have basically a property bubble in Australia too. So I think Australia is not the whole economy is a global economy, and a lot of people way over leverage their economies to the China growth story. So I think Australia is going to be due for a slowdown too.
Yeah, this is kind of off topic, but I have to mention it. I was just in Australia for 3 weeks, and I learned a lot about their economy. One thing that really surprised me was that they have about $250 billion of projects on the board. 75% of those approximately are LNG projects. So LNG is not going away. So
oh no, I like that. I like that long term.
Yeah,
but the base metals scare me though.
Yeah. So even if their economy does slow, they probably won't go into recession because they have all these LNG projects to keep their economy afloat, to keep their workforce and keep their unemployment from crashing. Yeah, they do have their housing is probably a third overvalued, and it'll probably come down, but it's not as bad as our market.
Well, hopefully their citizens haven't over-leveraged on their mortgages. They're not buying too large of a house, and then they're not also over-leveraged on their credit card bills.
Right. Well, they only have 22 million people in the country, so it's kind of a small country. And then they only have 22 million, but they have $250 billion of projects on the board. So that country on the whole is looking pretty good. I wouldn't mind living in Australia. They also have farming as well. So on the whole, a lot of resources. Brazil and Australia, I think, are the two strongest countries economically.
I think Canada's also in pretty good shape, although Canada has some property bubble issues with a lot of hot money that has come in from China to Vancouver for their property bubble. But, yeah, I think those are some of the better ones. Norway's also very strong with their oil and natural gas. I really like, in terms of besides gold and silver, and you've worked in the oil and natural gas industry for a while too, Don, so maybe you can comment on this. Besides gold and silver, I like, food, energy, and agriculture for investments for stuff. So I'm thinking those are going to be the other commodities. The base metals really scare me, so I think the other commodities are going to, the ones I just mentioned, are going to do well besides gold and silver.
That's the sectors you just mentioned are the only sectors I think people should be investing in. I think that food prices are going to do nothing but go up. I think agriculture is a fantastic place to invest. That's what Jim Rogers has always been talking about. I think he's right on the money on that. Right now we're literally living crop to crop, season to season. We don't have the inventories we have, for instance, in wheat and corn and soybeans. So it doesn't take much for those prices to go up. I actually am expecting really, really high prices in wheat and corn and soybeans. I think we could see wheat in the $20 a bushel range here in, say, the next 3-4 years. So I really like food as an investment. Energy. I think people really don't understand energy. I mean, it's absolutely amazing to me. Yes, and I do work in the energy sector. I don't think people understand the difference between flow rates, how much oil that you can actually produce versus reserves. Yes, we have reserves, but how much money does it cost to get that oil out of the ground to produce? Can we really get to 110 million barrels or even 100 million barrels of production flow rates? I just don't expect it. I'm not expecting it. Also,
not at anywhere near this oil price. I mean, maybe at $200 a barrel oil or something like that, but then you're going to create massive demand destruction and people are going to start substituting it out.
Right. But oil itself, it's just the energy, how much energy that you get. Oil is a very unique substance, and you cannot replace just because the energy content is unbelievable. For instance, one cup of gasoline, and you can put 8 people in a large SUV and go 100 miles an hour for like a half mile or a mile. It's unbelievable how much energy content is in that one little glass of gasoline. You can't get that kind of energy content in anything else. The big number.
No other liquid fuel. You can get it in uranium, but there's no uranium-powered cars, to my knowledge,
right.
Or thorium. Thorium's actually just as energy dense too. Thorium's even more energy dense than uranium, but that's another topic.
Right. And one of the things that people don't realize is that the amount of oil that gets exported, that is decreasing. Nobody talks about that. Since 2005, the amount of oil that's exported has been decreasing, not increasing. So I talk about the increase in production, which is increasing at about a 1% rate. It's very, very small. We're about at 88 million barrels per day, but the actual oil is only about 73 million barrels a day. The rest is LNG and some of your biofuels and stuff like that. But the actual oil is only 73. But the exports, the amount of oil that we actually export, is only about 41, 42 million barrels, and it's going down. So if exports are going down, and I expect them to trend down, you're not going to see the price of oil go down. So the price of oil doesn't go down. That impacts your entire global economy. Without cheap oil, it's very, very difficult for these economies to grow.
And also it affects mining massively too, because then any little drop in the price of gold and silver, a lot of the miners then, because their costs are going up, they can't make the margins, and they're not going to make the investments then to increase production. Some of those marginal deposits may be delayed. So I think we're close, like you said, to a bottom in gold and silver, and I think we may go sideways for another few months or something like that. But we're about ready to make a large move sometime in the next 6 months, much higher.
I agree on the move up. I'm expecting a $50 move up in gold in, say, the next 6 months on a one-day basis. And then once it happens, I think you're going to see actually a $75 move up in one day, and then followed by another $50 move up. So you'll see gold go up like $120, $40 over a period of a very few days. So just see this big move up in gold. I'm expecting that in the next 6 months, and then the trend, then gold just go to 2,000.
But before we wrap things up here, since we were talking about oil right before and then we went back to gold and silver, what were your opinions then on the IEA report? Because I know that you mentioned earlier how a lot of these models that were being predicted for oil production, they're just not come true. And the IEA is making these really bold predictions that the U.S. is going to be producing more oil than Saudi Arabia, that the shale oil production is going to be able to be grown literally on a linear line for infinite amounts till like 2030, and the same thing with oil sands. And the IEA's track record for this, they've made some really stupid predictions in the past. People should question their track record. I think they said that the oil production would be over it would be over 95 million barrels per day by this time frame already. They said it like 6 or 7 years ago, and we're barely at 88. So they've had no one's calling them out on this. People are believing them when they shouldn't. What do you think about all this?
I can't believe they're getting away with it myself. For instance, we were only producing about 5.5 million barrels per day in the U.S., and we're importing. But then we have another 2 million of LNG, so it's about 7.5, and we're using about 18, so we're importing about 11. So those imports are going to go away. Are we going to produce that much more? For instance, the shale oil, they're really talking about LNG. They think that the LNG is going to continue growing at its current rate. So we're not going to increase oil production. Oil production is about 5.5. It might go to 6.5.
They're saying shale. Sorry to interrupt you, Don, but not only are they predicting LNG increase, but a lot of from reading the analysis of other people that went through all the report, they're predicting the shale oil boom will go to 11 or 12 million barrels per day production for shale. Do you even think that's possible given the depletion rate?
No, it's not. That's what I said. We probably get to 6.5, not 11. For instance, in North Dakota, the Bakken field, we're producing less than 1 million barrels a day, and we're only adding. And we have, you have the big decline rates up there after 1 year of production, so they're almost spinning in place because the declines are so high after 1 year of production, and it costs a lot to drill them out. But if anybody that does any analysis on the Bakken field, that's why I'm amazing. They're supposed to be doing the analysis. Is that I don't think that the Bakken field will get much. By 2020, we're probably only be producing 2 million barrels a day. But then, so I don't expect it to go from 1 million, and they're under 1 now. Do you know the number by any chance?
No, I don't know the number offhand, but I know that the rig count up there in the Bakken now is decreasing, and there's people out there that are proponents of the shale boom and that believe in what the IEA says, and they're saying that the shale producers, all of them, are profitable at this price, which I know is not true. And if you look at the balance sheets for a lot of these shale producers, I mean, they're not making money on the natural gas side unless they hedge the contract, and they're borrowing cheap capital and they're loading their balance sheet with debt, hoping that the oil and the natural gas price go higher, and they're just drawing it out now.
Right. Well, let's just look at the next 8 years. So they're saying, okay, we're at 5.5. They're saying we're going to double that to 11 in oil. So the only place we're really drilling shale oil right now is the Bakken, and then you have the Eagle Ford in Texas. And
the Haynesville, right?
Yeah, and so those are not going to explode in production, I don't believe. And then you also have the Monterey field in California that hasn't been drilled yet. So they're probably thinking that the Monterey is going to...
California will never allow that.
Yeah, right, Monterey, yeah.
California has like 10 billion barrels of oil off the coast of Santa Barbara that they had to spill on in the 70s with old, offshore technology that they can make much safer drilling on now, and they're not going to let that be developed either. California would rather go bankrupt instead.
So this is all theory, right? That the Monterey field is going to get all drilled out, and so and it's going to have a big production. So I don't anticipate oil production in the U.S. ever getting, say, another 1 million barrels per day, or 5.5 to get to 6.5. So LNG might take us to 10, maybe, but you still are going to have to import 8, excuse me. So I can't imagine being oil independent unless our actual needs, and I think that will happen, our demand will drop down to, say, less than 10 million barrels per day because we're using a new energy source. Then we'll be energy independent. But I think that the gap for energy independence is huge. It's huge. I mean, we're looking at, anywhere from 8 to 11 million barrels of imports. And I don't see that. The oil shale boom has not really exploded. I mean, if you go and you look at the actual production at Bakken, and I thought it was Eagle Ford, but you said it was Haynesville. If you look at the actual oil production there, it's not huge. If it was huge, we'd be producing a lot more than 5.5 million barrels. I mean, we'd be producing 6, 7, 8 million barrels. And you'd be hearing about it. You'd read it on the news that this production was just going crazy. What we've been hearing on the news is the natural gas production going crazy. And now that is somewhat in decline. That's where your rig count is dropping because the price of, they were losing money on all that drilling. Plus, you're starting to get a lot of blowback because it's a very ecologically damaging technology. And we can talk about that if we have time.
Well, I've seen documentaries on that, like Gasland and All Fracked Up, and I've read some of the other research reports about the potential water damage, and it's a pretty safe technology. I mean, the technology uses a ton of water, though, for the hydraulic fracturing to drill it out.
Yeah.
The thing is, a lot of the oil companies, when these wells do go bad, and they do go bad sometimes, is when the oil company tries to cheat corners and not case the well with a full cement job. Those are issues, or when the company doesn't want to pay the full amount of money for all the water cleanup that it uses because it uses a massive amount of water. So those, I'm of the opinion that it can be done safely. It would just increase their costs more, and some of the smaller companies tend to try to cut corners.
Well, we're going to find out if, for instance, New York, upper New York State, I mean, all the water from up there goes down to New York City. So we'll find out very soon once they start drilling in upper New York State.
Well, that water that's in the rivers and stuff is already massively polluted with all the chemicals from the other factories that have been dumped in over the years. There's all the nuclear power plants that run off the stuff in there too. And then there's the coal stuff. If you've seen the documentaries on coal mining now, when they scoop out the whole mountaintop, I forgot the type of mining it is, but when they blow up the whole mountaintop and just scoop it out, like a lot of the junk that was kept underneath, that the earth was trying to keep from going back up to the top of the earth and polluting people and causing cancers and poisons and stuff like that, the arsenic gets into the water. So the water is already polluted. I think besides, oil, natural gas, and gold and silver stocks and agriculture and farming, I think a really good investment for people, some of these water cleanup stocks that, with the shale drilling, they're just getting tons and tons of contracts right now. Mm-hmm. So while the shale drillers are spending all this money drilling and their profit margins are low, I think the water fracking cleanup companies can make really good money, and these guys are going to clean up, rivers and oceans too, I think, down the line.
Right, but don't underestimate how toxic the water can get on these fracking jobs. It can get unbelievably toxic, and the cleanup can be nearly impossible.
Oh, really?
Oh yeah, it's like I said, you saw Gasland where they literally light it on fire and then it smells like turpentine. I mean, to clean it up is unbelievably difficult.
Well, they're testing new water cleanup. I don't know if you've seen this technology, but they're testing new ones where they run the stuff through an algae machine, and the algae machine pulls out all the oil that was left over, like the other hydrocarbons, and then it also purifies the water. So these things are having remarkable success getting all the stuff out, and there's a small company that we've talked about to some of the people who follow our work that is booking that they already have 2 licensing deals for machines now to sell it to the water cleanup company. So I would expect then that if this company continues to demonstrate with their machines that it does a good job, that it's going to really get a lot of business because it can solve those problems that you just mentioned.
Yeah, I agree with you that the technology is always a possibility for cleaning the water. That is something we need. We need to do that. Right now, we should be spending money on that, on cleaning up the water so that if we do have problems, because we need this, we need this natural gas. We need it. In order to maintain our way of life, because if we don't have enough BTUs, we're going to have problems.
Our standard of living is going to massively decrease.
Right. So we need this gas. We need this natural gas. We need to be able to frack it, but we need to do it safely. And if we can't do it safely, we need to be able to clean the water up. So. Oh yeah,
trillions of dollars went down the tube, wasted on government welfare and warfare spending, and into the banksters. It was wasted on stuff like that instead of being invested in smart things like new infrastructure. I mean, The U.S. still has decent infrastructure compared to other countries, but it's definitely rapidly declining, in some states worse than others. So really needs to be fixed if our economy is going to start repairing itself.
Right. Well, like California is nearly bankrupt, and now that they increased their taxes, a lot of companies are leaving the state. A lot of affluent people are leaving the state. So California has this huge economic issue with their budgets and with their economy, but they have this huge Monterey field, this huge natural gas, shale oil, shale gas that they could get to, but it's not going to happen unless technology is proven. So the technology needs to be proven very soon. Now,
I still don't think the environmentalists would allow it in California. That's one of the worst states for environmentalism. I mean, they have so much oil, in the shale field, like you said. They have a ton of mining natural resources, too. They have gold projects, all those things. And then they have tons of oil offshore, and they're not allowing it. They would rather go tax the rich and tax the productive than, collect.
But if they can prove they can clean the water, first the oil companies to come clean and say, okay, these are the actual chemicals we use in the ground, and then they say, okay, and then after they go in the ground, this is what the technology we can use to clean the water. If they can do that, and then if California is suffering, then maybe we could get fracking in California as well. But until that water technology is shown that it works, I think the ecologists and the environmental people are going to fight it. No, I agree.
Yeah, and I think that's going to put, even if fracking is allowed in California, I think the EPA is going to come out with a new directive with 3,000 or 5,000 pages listing all the guidelines and rules and regulations for fracking, and I think that's only going to force the production costs, which are already high for fracking. For a lot of fracking producers, it's over $35 a barrel production. For some of them, it's as high as $80 all-in production costs. So they can't even make money at $80, $85 a barrel WTI.
Right.
And it's going to force that production cost even higher.
Right.
So that's why I think for oil, we've been telling a lot of people follow our work. We release a Petroprop report. People can go to our website, sign up, give us their email address, and get it for free now.
Right.
And we think oil, besides precious metals, is a very good investment at these levels. There's a lot of good oil stocks with good dividend yields at these prices, over 5% dividend yields for a lot of proven oil producers, and people can just park cash there and wait for the oil price to recover.
Yeah, I couldn't agree more. Yes, definitely.
Okay, well, wrapping up the interview, Don, please tell our listeners more about your book and your website and your paid subscription service, because I think our listeners would be interested in that, because we do have listeners who are still interested in juniors, although we've been getting less and less emails with people who have been putting more money into juniors, but I think people still want to speculate with their capital, and I think your newsletter is one of the best ones for helping people do that.
Oh, thank you, Jason. My book, I wrote the book to help people to understand how to invest in gold and silver mining stocks. So it's written from an investor for investors. So it's almost like a textbook. A lot of people have said. I have a chapter on juniors that's 70 pages long, and you won't find any good books out there on how to invest in junior miner companies. So it's definitely worth the money if you invest in junior miners. My webpage is goldsilverdata.com, and I created it so that people could get access to data on these mining shares. So I have this very large database, and I have a really good search engine on my website that will allow you to search and find potential companies. And I've broken all the juniors into different groupings. I have 8 different groups for the juniors, so you know exactly what you want to invest in. So it's a good site to help people to find data on mining shares.
And I would attest, because I've looked at other books besides just yours, Don, that yours explains how to invest in the junior miners and how to value them and do research on them the most simply in layman's terms that almost everyone can understand. I've looked at books, and the majority of other books out there, your other competitors' books, are written by geologists for geologists, using terms and they're just very difficult for people to understand. They would have to spend months reading other books and articles and stuff like that before they would understand those more sophisticated books, and you do a good job taking the sophisticated and explaining it very simply.
All right, thanks, Jason. Yeah, after the price of gold goes up, you can have me back, and we'll go over on how to value these companies.
Great. So thank you very much for your time, Don, and we'll have you back again shortly.
Thanks, Jason.